the attendance and all that. So I'm going to introduce our good friends at Freddie. So I'm going to introduce Monica LaRue. And Monica, I forgot to grab your title. I mean, we worked
It's
on
okay.
so many things together, but I don't know your like specific title.
No worries, no worries. I'm totally fine with that. Thank you guys so much for joining us today. My name's Monica LaCrue. I serve as your affordable lending manager. And so my role is to focus on increasing homeownership opportunities for all communities by working with lenders, housing counselors, and community partners. My job is to identify and promote lending solutions that remove barriers and help ensure all families have access to fair and affordable mortgage products. In this work, we've seen persistent myths and misunderstandings that can prevent both borrowers and industry professionals from embracing solutions that could really make a difference. And one of those misunderstood opportunities today is manufactured homes. For many, the term still brings to mind outdated stereotypes, images of poor quality, temporary structures, or limited financing options. But that narrative is no longer accurate. Today, manufactured homes are built with great federal standards. They have offered many new design features and play a critical path to affordable homeownership for many of Americans today. As we navigate the housing market that's really challenged by affordability, lack of supply, and growing demand, it's essential that we take a fresh look at all viable solutions, and manufactured housing is one of them. So in today's session, we're here to challenge the stigma. We're aiming to open the dialogue about how manufactured homes can really play a critical role in creating sustainable homeownership. So thank you so much for joining us today, for your curiosity, and for your commitment to rethinking what's possible in the future of housing. I'm going to pass it over now to our keynote speaker, Dennis Smith, who will take it over from here.
Thank you, Monica, for that great introduction, and Candace for helping us organize things behind the scenes with Prime Lending. We're excited to be here today. You don't want to see me and my face, so I'll just go ahead and move to the next slide. We're really trying to move the manufactured housing market forward. And as Monica mentioned, there's such a housing supply today that manufactured housing is often misunderstood, or there's a stigma that's associated with it. So I thought what we would start with is really defining what is a manufactured home. There's many different terms that are used in this space, and we want to make certain that we clarify those terms. So you may often hear something such as a trailer or a mobile home. So we define that as anything that is built on or before June 15th, 1976. And we do not lend on anything built on or before June 15th, 1976. And the reason for that is actually quite simple. If we look back at the history of factory-built housing, at the end of World War II, when many of the servicemen and women came back from serving overseas, they wanted a type of housing that was transient. They wanted to be able to go to where the jobs were located during the Industrial Revolution. And that often meant moving from city to city. So early, those homes were called mobile homes. And believe it or not, there were no building codes, either state, local, or nationally, that addressed safety and soundness of those homes. So we have some concerns about that from a consumer protection standpoint, because we want to make certain that they're living in quality, safe, habitable homes. In Congress actually passed an act called the National Construction Safety and Standards Act for manufactured housing. They passed the act in 1974, and they said anything that is built on or after June 15th, 1976 must be built to this standard, which they placed within housing and urban development. So that was the first national code, National Building Code for manufactured homes. That code is often referred to as the HUD code, and it defined manufactured home as built on a permanent chassis that is transported to the site, is affixed to a permanent foundation. It is built on that chassis that has axles, tongues, and wheels, and many of you may see them going down the road or prior to installation before those tongues, axles, and wheels are removed for mortgage purposes. So it literally took an act of Congress to enact the federal code called the HUD code. And there's differences in that HUD code that we'll talk about in just a minute. We often hear about modular homes as well, which is an additional type of factory-built housing. However, the difference between modular home and manufactured homes lie in the code that they're built to. So modular homes are certified to meet or exceed the state, local, or regional building codes, and they are permanently installed on site. Although they are built in a factory environment, they're transported on the flatbed of a semi-trailer, and once they are near the site, they use a crane to remove them off that flatbed and put the module of the home into position, and they'll place several modules next to each other to complete the home. A couple differences in the codes. The modular code, because it is that state, regional, or site-built code, the IRC code, is more of a prescriptive code. So it might state that you have to have 2x4s in the wall and they must be 16 or 18 or 24 inches apart. It will tell you how to do things in a very prescriptive manner. The HUD code is actually a performance-based code. So it gives flexibility in how the homes are built and has requirements around the envelope of the home, the structure of the home, certain ratings for that home, as well as energy efficient items for that home. So that's a little background on how we define manufactured housing, and really it took an act of Congress to define that. Well, how do you know a home is a manufactured home? And for those production folks, the underwriters and processors on the call who see the appraisals, they know that the appraiser will provide a copy of one of two items that are located on the home, either the HUD certification label, which is the red tag on the left side of the home, or the HUD data plate, which is on the interior of the home, which is on the right side. So there will be a HUD certification label on each section of the manufactured home, and that states that this home has been built to meet the HUD code requirements at the time. Now keep in mind that the HUD code has changed since it was implemented back in 1976, and there's been different updates and iterations to make certain that that code stays constant with today's building technology as well as today's building standards. So there will be a red tag on the exterior of the home on each section. So if it's a single section or a single wide home, they will only have one of these tags. But if there are a double wide or a multi-section home, there will be one of these tags on each section of the home. Now the HUD data plate is located on the interior of the home and gives us more information about the particular home itself. It gives information such as the components that were used when building the home, what the HVAC system is made of, what the different appliances that are in the home are made for, who the manufacturer was, the vehicle identification number. If they have a floor plan name, it'll place that on there as well. But what you might notice are the three maps at the bottom of the HUD data plate. So the HUD code takes into account different climates across the country and separates the HUD codes into three different zones. So you can imagine if your service area in Texas, those homes are going to be built to a different requirement than, let's say, if you were in North Dakota. So in Texas, you probably don't get the enormous amount of snow that North Dakota does. So those homes that are built in North Dakota need to be able to withstand the winters and the roof loads from the snow. So there are variations within the code, and they build the homes based on where that home will be located. So you can have a manufacturing home facility that is located, let's say, in Tennessee, that may deliver a home to Ohio, that may build it to a colder weather zone than what Tennessee is in. So that's one way that they make certain that the home they are building meets those requirements for that location, is based upon where that home will be placed or sited. You can't see it very well, but there's also a map that shows the wind zones. There are different lines along the Gulf of Mexico, Florida, and the eastern seaboard. And based on some of the experiences with manufactured homes during hurricanes, they actually increased requirements for manufactured homes that are located in areas that are prone to those high wind zones. So those are additional steps that need to be done to the home to make certain that it is more resilient to withstand the climate for where it will be located. So this particular example does not indicate that it was built in one of those wind zones, but it is referred to as the wind zone map. And there's a lot of great information on these particular HUD data plates. We do require that the appraiser provide images of the certification label or data plate. And here's where I often get asked, well, Dennis, they're buying the home, or they've owned the home for a while and they're refinancing. They replaced the kitchen cabinet and the HUD data plate's not there. And maybe they replaced siding, so the certification label isn't there. What do we do in that instance? So FreddieMac's requirements is that one of those items must be available in the appraisal, either the certification labels or the data plate. And if both of those items are missing, then we require a HUD compliance certificate. So the Institute for Building Technology and Safety actually catalogs every manufactured home that is built to the HUD code. So we would need to reach out to the IBTS to receive a letter or a manufactured home performance verification certificate to include in the file. And as you'll see, it gives the same information that is on that HUD data plate. So as Monica mentioned, part of the challenge with manufactured housing is some of the perception that we have versus the reality of today's modern manufactured homes. The image on the left is probably a pre-HUD code home. But if you think about our entertainment industry, they do manufactured housing no justice, as many of the times they are portrayed in our entertainment industry, it is in a manufactured home community that the home itself is in a state of disrepair. Perhaps it has couches or appliances sitting right outside the doorway or on a porch. And typically it's, my wife watches the investigative shows, so it's typically a domestic violence situation where the police are called, and it really paints a negative picture of manufactured housing. If you look at the image on the right, this is the reality of today's manufactured homes. With the increase in technology and the building materials and progression that they have had in manufactured housing space, their homes can often look just like site-built homes. So a lot of times we're asked, why would someone want to buy a manufactured home? They're just going to depreciate in value. So keep in mind, we're talking about mortgage lending, where the home is on a permanent foundation. The wheels, tongues, and axles are removed, and the title to the home is converted to real property based on the state requirements. So FHFA, the Federal Housing Finance Agency, in their home price index in 2018, actually wanted to see how well do manufactured homes appreciate compared to traditional homes. So what they did is they went and dug into the data and they looked for the same home that was sold at a point in the past and compared it to a point either in the present or in the near present, and then saw how much that home appreciated. And then they compared that to traditional site-built homes during that same time frame. So the line on the yellow line on the graph indicates the appreciation for traditional homes, and the blue line indicates the appreciation for manufactured homes. So you'll see there are times where the manufactured homes actually appreciated more than the site-built homes. There were times where they were equal, and there's times where the traditional homes exceeded the appreciation for manufactured homes. But my takeaway is that the trajectory for appreciation is very similar to site-built homes and is a good investment for those consumers looking to be homeowners and looking at manufactured housing as an opportunity or a vehicle to become homeowners. Another thing that we hear is that manufactured homes, they're just not built well, right? They're built with inferior materials. They're not resilient to natural disasters. And the fact is that manufactured homes today are built using the same materials as site-built homes and are designed to withstand natural disasters. Maybe when the HUD code first started out, manufacturers looked at an opportunity to build a vertical business, meaning that they were going to put specialized kitchen faucets or bathroom faucets or fixtures, or maybe they had a special sized door that they would use in construction. That way, if the customer needed to replace that item, they would need to go back to a manufactured home parts store to buy that part because it was a unique size. Well, the manufactured home industry recognized that this wasn't a model that was sustainable, and that if they used the same materials that are built in site-built homes, then a consumer who wanted to make updates or replace broken fixtures within the home could go down to their big box hardware store and purchase that replacement item. So that is one of the things that probably about 20 years ago, the industry really took note of and shifted their thoughts on moving from a captive audience to a wider audience who could then go and utilize those materials available to them at the local hardware stores to make improvements or replacements in their homes. And as I mentioned, the HUD code is always being updated with housing and urban development. There's actually a manufactured housing consensus committee made up of industry representatives from different factions of the manufactured housing industry that makes recommendations to HUD on what they could do to improve the code. And then HUD will take that into advisement and put it through the actual rulemaking process so that those changes to the HUD code are codified within the rule in the Federal Register. I think part of the fiction of manufactured homes are not resilient may also come from some of the sensationalism of journalism. Oftentimes, when there is a natural disaster, journalists will look for where is the most damage done. And if there's a manufactured home community, there's a large density of homes. And oftentimes there may be those older mobile homes that weren't built to any standards or have any resiliency components to those. So the HUD code has been updated to make certain that those homes are more resilient to natural disasters. I believe in 1993 was one of the most recent after the hurricanes came through Florida. A couple of years later, Hurricane Irma came through, and the newer manufactured homes that were built to the more stringent HUD code actually survived the storm in similar manners as the site-built homes, and in some cases, even better. So enough about that. Let's talk real quick. I know Monica mentioned that Manufactured housing could be a part of the solution to our affordability crisis. Around 7.5% of existing homes today across the United States are manufactured homes. And historically, they've been about 9% of new construction starts. But over the last 2 or 3 years, they're starting to see more expansion and more market acceptance. To now, they're about 11% of new construction starts. Most people think, well, manufactured homes are in rural areas. About 15% of manufactured homes are in rural areas, and about 3% are in urban areas. There are more in rural areas, but we're starting to see some of the zoning challenges be set aside in manufactured homes used as infill in urban settings, as well as in suburban settings for either infill or complete development of for sale units of manufactured homes, where a developer is using that instead of building a site-built home. Well, why do they want to do that, or what's the benefit of manufactured homes? On average, they cost per square footage almost half of what a site-built home does without land. So manufactured homes cost about $85 per square foot to build, whereas the site-built home itself is around $165 per square foot. It is not because they're using inferior components. It's because they're using the economies of scale in the factory-built process to pass on their cost savings to the consumer. You think about a manufactured home builder who builds 15,000 homes a year. When they go to their supplier to buy kitchen faucets or bathroom vanities, they're going to get a deeper discount than that builder who builds 50 homes per year. And they pass those costs on to the consumer. In addition, manufactured homes, they don't have to worry about delays due to nature. The rain delays, the snow delays in some environment, the heat delays even in other environments, because they're built in a factory, climate-controlled environment. They have skilled tradesmen that show up to the job site every day and build the homes in that factory environment. Across the country, there's currently 38 home building corporations with 152 factory facilities. And in 2024, over 103,314 manufactured homes were built. And the Manufactured Housing Institute is projecting that number to increase to around 107,000 manufactured homes this year. Now, the industry itself looks at the number of homes that are shipped to determine what volume is going to either different regions or states. So this map is from the U.S. Census Bureau, where they have indicated where those shipments are headed. So although that factory facility might be in Texas, that home might be shipped to Oklahoma or perhaps Arkansas. So as you'll see, the larger green dots and the darker green represent more shipments. So I know prime lending is all across the country. I would challenge you to take a look at the dots in your service area to maybe get a little better understanding of the deliveries. Oftentimes I hear Michigan. I really didn't think Michigan had that much manufactured homes, or Oregon or Washington, California. But there is a lot of opportunity all across the country to lend on manufactured homes. So I mentioned one of the differences is that manufactured homes actually come with a title. And this can be one of those challenging items if that home has not already been converted to real property. That's a surprise for those underwriters and processors when they get the title work back and either have to have that conversation with the customer or even that customer's real estate agent. If it's a purchase transaction, then they have to talk to the listing agent. Title conversion requirements vary from state to state. There are different jurisdictions and there are different requirements. Some states actually require that that title be surrendered, and then the home and land become one record. Some of them are certificate of title states, where the state will convert both the title and the real property into one, but send that title back showing that it has been converted to real property. And some states are title conversion states. So we require that that home be titled as real property and taxed as real property. Again, the wheels, axles, and tongue hitch must be removed from the home and must be permanently affixed to the original permanent foundation. And the HUD code actually has foundation requirements as well to make certain that that home sits on a foundation that is structurally designed to withstand that home load. You think these homes are built on a chassis, so there's different weight bearing than a traditional site-built home. That the home must be connected permanently to the utilities, and that any structural modifications to the home itself must be verified as approved by a licensed professional engineer or local, state, or federal authority. Oftentimes I get asked, Dennis, why do you do that? I would like to think first and foremost, it's for the consumer protection. I sat in on an Appraisal Institute course that FreddieMac helped the Appraisal Institute design to educate appraisers on how to appraise manufactured homes. The instructor was an expert witness in different court cases, and he had shared images of a manufactured home that had a carport attached to the home, and the appraiser did not call for a structural inspection. And because he did not do that, the homeowner was actually suing the appraiser because what happened is there was a straight line wind gust that picked up that carport and actually removed the roof from the home and made it unlivable for that customer. And that could have been something that they caught through that inspection or through an engineer certificate. So first and foremost, it's about the integrity of the home and making certain that consumer is protected. And we also want to make certain that that home has not been moved from the original site from where it was located. So the manufactured home is on a separate appraisal report. It's FreddieMac Form 1004C FreddieMac Form 70B or Fannie Mae Form 1004C, a manufactured home appraisal report. We do have a couple of requirements, as I spoke about earlier. The appraiser should provide photos of the HUD data plate and or compliance certificate, and the appraiser must include at least 2 comparable sales that are manufactured homes of similar configuration. So if that's a single section home, they would compare it to single section homes for at least 2 of the comparable sales. Now note, nowhere in our guidelines does it say that site-built comparable sales are not to be used. I have seen appraisals where the 2 manufactured homes are used as comparable sales, and then there may be 4 or 5 site-built homes used as comparable sales with even more weight given to the site-built homes because it reflects the actual condition of the home and floor plan, etc. So I really wanted to point that out, that our requirement is that there be 2 comparable manufactured home sales, but we do not put a restriction on above and beyond those 2 how many site-built comparable sales can be used, as long as they are of similar quality. So our loan product advisor risk tool actually has a couple of areas where you need to indicate that this is a manufactured home and whether it is a single wide or a multi-wide home. What this does is it will actually bring back the appropriate findings for you when you submit it through Loan Product Advisor. And I know that you use Blue Sage, and I'll ask Candace to come back in on the next slide and give you a quick pointer on how your system, Blue Sage, talks to Loan Product Advisor. But there is an indicator in Loan Product Advisor for manufactured home, and then also whether it is a single wide or multi-wide. And then you will look at your actual findings or your feedback certificate, and under property type, it will say manufactured multi-wide in this case, or it will say manufactured single wide. So I'm going to turn it over to Candace real quick to talk about the Blue Sage, and I'll take a quick drink of water.
All right, awesome. Okay, friends, so if you're inside of Blue Sage, putting the data in correctly is a pretty big deal, right? So when you're in the borrower property ribbon, make sure you go to that property details, and when you have that subject property, make sure that you do that drop down and select manufactured home. That's important. That blue box to the right where it says manufactured home information, you've got to click on that. That can really skin your knees if you don't click on that box. So this is all the details that we'll go over to your findings. So we want to know about the secured property type, what kind of land it's on, make, model, year, like all of that goes in there. But do you see where that manufactured home width is? That's what's also going to go over to LPA so that we know if it's a single or a multi-width, etc. So you can find all of that information on everything that Dennis talked about earlier if you don't have your appraisal just yet. Okay, so that's where you find it. We also have some resources, and Mary can pop that in if you're in the LOP. It walks you step by step. It doesn't have screenshots, but it does tell you exactly where to find manufactured housing. Just do Control F when you pull that PDF up, type in manufactured, click enter, and it will take you to all the sections that walk you through manufactured home data entry. That's a pretty big deal. We also need this information for closing. So it's not just about your LPA findings. All this information has to go onto those closing docs. So it's kind of a double whammy there. All right. Dennis, there is one question before we move on, and it says, on the appraisal for the two-man home comps, what distance will be acceptable? In rural areas, it may be 10 plus miles.
So I think if you look in our comparable selection, that for manufactured homes and specifically rural areas, we do allow for homes that are greater distances. And I would even recommend that if there is an older comp closer, that the appraiser sometimes use that and makes the appropriate adjustments as well. And that's another reason we allow for those site-built comps to be used too, to give a more reflective of what that neighborhood is. Especially in these rural areas, the appraiser might have a good site-built comp and then use a couple of distance-wise or age-wise manufactured home comps just to show that manufactured homes is acceptable in that market. So great question.
Awesome. Thank you.
You're welcome. So thank you so much for going over that, Blue Sage. I'd be lost, and I used to originate underwriting process, but that was before I had gray in my beard and all the new LOSs. Wow. I wish we had that back in the day. That's makes life so much easier.
Yep.
So we talked a lot about the homes themselves, why manufactured housing, the cost of them, that they're made with quality materials. But what about some of the financing options? So we worked with Candace to make certain that we're reflecting some of our offerings and products that Prime Lending has. And for any additional questions, make certain you reach out to your product team. They'll be able to point you in the right direction. Home Possible, our low down payment offering for either first-time buyers and other buyers who are at or below 80% of area median income, do allow for manufactured housing. Now, I know the screen says down payments as low as 3%. but that's for site-built homes. For manufactured homes, they must come up with 5% down. So for manufactured homes with Home Possible, it's a 95% loan to value. We do allow for those flexible down payment and closing cost options. We do have all the additional flexibilities of Home Possible for manufactured homes, such as the non-occupant co-borrower, the private mortgage insurance, the special rates. And as a reminder, private mortgage insurance stops at 80% LTV. I know sometimes some customers might look and see a little better interest rate from a different investor that maybe has upfront and annual mortgage insurance premiums. But when they look at the actual payment, a conventional loan might be better off from a monthly payment perspective. And then if they could drop that private mortgage insurance in a couple years, it will save them even more money. And then I know Prime Lending works with several housing finance agencies across the country, some perhaps state and some local. We do permit manufactured housing on our HFA Advantage product. It is based on the Home Possible underwriting requirements. Many of the housing finance agencies will establish the area median income qualification requirements. So that's different than Home Possible. And for HFA Advantage, it's typically 1 unit primary residence and all borrowers must occupy that. So just wanted to point that out, that those are a couple of low down payment options that are available for manufactured housing through FreddieMac. And here's a little different look at manufactured homes with Home Possible. It must be a fixed rate mortgage, 95% LTV, TLTV, HLTV. We will allow for a purchase, a no cash out refinance, or a cash out refinance. But I will advise that you need to check your loan to value on the no cash out refinance and cash out refinance, because those are restrictive. There are no pricing adjustments or credit fees in price on a manufactured home sold to FreddieMac where the area median income is 100% AMI or less. So just wanted to point that out. Those pricing adjustments are only for AMIs greater than 100% because of our credit fee and price cap. So just really wanted to point that out. And for our Home Possible, it can be a single section or a multi-section home. And the Home Possible isn't the only offering that we have for manufactured homes. Our standard conventional offering, mortgage offering, can be used for manufactured homes. As we mentioned, our Home Possible, many of the HFAs that offer HFA Advantage. We do offer new construction through our construction conversion with a 2-time close. Even the renovation offerings, Choice Renovation and Choice Reno Express, allow for manufactured homes. I will point you back to your own product and policy parameters in case of those internal overlays for manufactured homes. And also Green Choice mortgages that offer energy efficiency improvements where the customer wants to make that home more energy efficient. There's opportunities there for manufactured homes. I'd like to say that manufactured housing has become part of our DNA at FreddieMac, that during these times of undersupply, extreme demand for housing, that manufactured housing can be one of the ways that we help that housing supply catch up and meet the needs of potential home buyers across the country. Well, what about accessory dwelling units? We hear a lot about accessory dwelling units as more and more states or municipalities pass zoning and legislature that is friendly to accessory dwelling units. FreddieMac permits an accessory dwelling unit, and there are many manufacturers who build accessory dwelling unit floor plans. Our definition of an accessory dwelling unit, it is an additional living area that includes a kitchen, a separate entrance, contributes less to the value of the property than the primary dwelling unit, includes a bathroom, is independent of the primary dwelling unit, and is subordinate in the living area. Now, it can be part of the home itself. So you can convert, let's say, a basement that meets all of those specifications. That can be an accessory dwelling unit, or it could be an independent, standalone accessory dwelling unit. Whether that be a converted basement space, they perhaps convert the garage into living space that have all those components, space above the garage, or it can be a detached structure built on the main home site or lot with the appropriate zoning. There are different eligible property and transaction types with an accessory dwelling unit. So we permit a primary residence, a second home or investment property, the purchase or refinance, and it can be up to a 3-unit primary residence and allow 1 accessory dwelling unit. And I often get asked, well, Dennis, why is there that limitation? If you look at single family is defined as anything that is up to 4 units. And multifamily is considered anything 5 units and above. So if you had a 3-unit with 2 ADUs, that would actually be 5 units and would fall into the multifamily realm. There are certain things that are not eligible for accessory dwelling units. So currently properties with more than 1 accessory dwelling unit, a 4-unit property with an accessory dwelling unit. Why? Because the sum of the units then becomes 5. Manufactured homes on a leasehold estate with an accessory dwelling unit because they're leasing the land that is beneath it on the long-term lease. Now, what is not eligible is a manufactured home as the primary residence with manufactured home as an accessory dwelling unit. You can have a manufactured home with a garage that's been converted, or a detached dwelling that has been stick built or modular as an ADU, just not manufactured home as the primary and manufactured home as the accessory dwelling unit. So last but not least, I wanted to share with you some resources that are available on FreddieMac.com. I know Prime Lending has a wealth of information in their library, and that should be your first stop. We have a specific manufactured housing product page, training and resources, different research that's been done in the industry that is available to you free of charge. But I always recommend checking internally first with your own product and credit teams to make certain that you are up to speed, to take into consideration. Maybe Freddie Mac has a product that they have not launched yet at Prime Lending, or perhaps they have an overlay or additional insights, such as how to put it into your loan origination system to make certain that when you receive the Loan Product Advisor feedback certificate, it is accurate as can be. So with that, I'll turn it back over to Candace to see if we have any questions. I know we've got a few minutes.
All right, awesome. That was great information. Y'all, Mary has popped in a lot of really helpful links into the chat, so make sure you're checking those resources out as well. But before we wrap up, anybody else have any great questions before we jump? I will say, all right, here's one. Hang on one second. When is the engineering certification required on the manufactured home we are financing?
That's a great question. So if there have been any additional structures built onto the home itself and attached to the home, we require an engineer's inspection or certification that it was inspected. Also, if the appraiser or a home inspector would call for any additional certifications or engineer inspections, that would be required. So I equate it to when I was on my very first house hunt, we went into a home and it had a big bow in the wall. I know that any appraiser that walked into that would say that they would want an engineer to inspect the basement wall because it was bowed. There's certain things that will stand out to either an appraiser or a trained inspector where they will actually call for an engineer to inspect and certify that. So those are the instances where we would need that engineer certification.
All right. Good question. Anybody else?